You can eliminate most deals in 5 minutes if you know where to look. That is the topic we'll cover in today's pop up live. But before we begin, for those who perhaps do not know me or are meeting me for the first time, and maybe this is your first time joining the LinkedIn and YouTube pop up live events, my name is Vessi Kapulian. I'm a former commercial lender turned real estate investor, entrepreneur, and advisor. I work with family offices and family enterprises at the board level, and I selectively invest in multifamily alongside with other high achieving professionals. I also help investors vet deals with confidence and ease, either through second set of eyes deal reviews, or for those willing to do a deeper dive through my mastering multifamily underwriting community. And along those lines, I actually wrote a best selling book on the topic. But without further ado, let's get straight into it because it's a topic I find myself frequently discussing with passive investors, and many of them think that the due diligence starts when they open the underwriting model. And I don't want to diminish the importance of looking at the underwriting model. That is certainly a key step, one of many, in performing a due diligence on a deal. But this is not the most important step, especially in the beginning when you're trying to sift through multiples of deals and really being mindful and strategic of where you want to spend most of your time. And usually, where that starts is with the deal presentation. A lot of people call it the pitch deck. Not my favorite word, but that's a very common name you'll hear, or investment offering presentation. Or deal deck is another common name you'll hear it referenced as. And so once you're able to look through that in 5 minutes or less, then you can be more strategic and mindful of how you spend your time. And I just want to make it clear, this is not about rushing the due diligence process. It should never be rushed, but it is about being able to quickly recognize or see through certain patterns, maybe red flags. And after reviewing a number of deals, after having had your investment criteria, investment thesis, and goals very clearly set and very well defined, then that will help you be more efficient. And so the question is, in that case, what should you look for immediately? I cannot tell you what you should and shouldn't do necessarily, but I'll share with you my process and what I've seen other successful investors apply so they can be more effective and efficient with their screening process. Number one is the sponsor team and their roles very clearly defined and their track record. At the end of the day, this is still a people's business, and you want to know who the people are behind this particular investment, especially the key decision makers. I'm often surprised when I see that missing index, or sometimes it is buried in the appendix. And oftentimes when I ask the question, people are making the assumptions or statement rather that, well, we've already done this gazillion times, you already know who you are. Well, sure, if you're a repeat investor with that group, or perhaps exclusively invest with that group, of course you know them very well. But in most cases, these deals are presented not only to existing but also outside investors, or investors who the sponsor perhaps recently built the relationship with. So in that case, it's important to cover that, because at the end of the day, the deal really hinges on the operator, their ability to execute and ability to navigate through turbulence water. So you want to understand who they are, what their professional background is, what their roles are, and that should be very clearly identified on the deck. And so again, here what I'm looking for is, for the people, do they have a relevant, repeatable experience that applies to the subject deal? Number two is the actual property. Maybe see a couple of pictures of the property and ideally the full address. In most cases, I do see that in many decks, but I'm surprised when that information is missing. Um, in other words, if you're presenting a property in the Dallas market, give me the address, give me the unit count, so I can get a sense of what we're talking about here. If you just mentioned the Dallas MSA, it doesn't really tell me anything, right? Because the Dallas MSA has so many different submarkets, and I want to have the address so I can quickly look it up, get a sense of the not only the Dallas market in this particular example that I'm giving, but the submarket, the neighborhood level. And I actually have a tool to help save you a lot of time with that I included in the book Mastering Multifamily Underwriting that I mentioned at the beginning of the call, to help you do that in a few seconds, maybe up to a minute, versus spending minutes in doing that type of initial diligence. Number three is the business plan. Is it clearly defined? Are there expected or pro forma rent lifts clearly spelled out? What I'm really trying to get a sense of here is what is the upside, and how will that be achieved, and is it realistic? Having that information in the deck will very quickly help me determine relative to the capex projected capex spend and relative to the projected rent lift, what is the ROI on the project? Is it feasible? How does it compare to perhaps other apartments in the area? Or is this simply the proverbial we're going to renovate the units, push rents, and that's how we're going to make money? No, you I really want a little bit more depth here. Number four is the numbers. Now, again, I'm not talking about the full underwriting model, and no, you cannot fit that into a slide deck, but it is one slide that shows the T12 and the 5 year pro forma, assuming this is a 5 year deal. I really want to see get better visibility on are they going from zero to hero. Also, having that information relative to some of the other numbers, such as purchase price, will help you very quickly calculate entry and exit cap rates, which are key data points. And I've spoken at length about those in prior live events, as well as my educational content. And I do want to see the P&L all the way down to the cash flow before distributions. Very often that's cut off at the NOI level, and while NOI is important, we have to look below NOI, right? What does the cash flow after debt service and other asset management fees looks like? If I cannot see that clearly, that raises a lot more questions. Number five is the sources and uses, the fee structure. I mentioned CapEx, so the CapEx budget. This is where I really want to see, are there buffers built in? Is the fee structure consistent with market, whatever market is at the time of the deal is presented? What are the sources, right, for taking this deal done? Typically it's debt and equity, right? And how is the money going to be used? Very ideally, again, very clearly defined with this is how much is in transaction fees, acquisition fees, reserves, escrows, capex, etc., in addition to the purchase price. And I'll give you one more. I know I mentioned five up to this point, but not many decks have that. It's rather an exception, but it's the risk analysis of a deal. And ideally, what I want to see here is not necessarily a summary of the PPM, which is the risk section of it is typically 20, 30 pages, right? I don't want to necessarily see that, but I want to understand from a key sponsor's perspective, what are the 3 to 5 key risks with this deal, and how and why do they think these risks are mitigated? This is probably also the place where they'll have a slide showing the sensitivity analysis that will show you if things don't go as planned. Of course, the upside, you can always look at that, but what I really focus on is the downside. So if things don't go as planned, how bad does it get? And am I going to lose money if rents maybe don't grow at 3%, if rents are flat, or if maybe cap rates expand at the time of exit, and so forth. And so at this point, when I skim through the deck, and ideally it's not a 60 plus pages detailed deck, you can always request the detailed version later, but probably no more than, I would say, 20 pages is what I'm looking for. And I'm not necessarily deciding whether to invest, at least not at this time, but what I'm really looking for is to decide whether this deal deserves more of my time, because effectively the five elements I just shared with you would give me an early indication of how disciplined the sponsor is, what their background is, how transparent they are, and whether their story holds up at a higher level. So we're not underwriting, we're not doing deep diligence at this very first stage, we're just filtering. And so you do not need a full hour to know if a deal is worth pursuing or not. All you really need is 5 minutes or less and a very clear framework to determine if it is worth your time. Because at the end of the day, the goal is not to analyze every single deal that hits your inbox, but it is to quickly say no to the wrong ones so you can spend more time on the right ones. And if you need a second set of eyes on a deal before you go deeper, feel free to reach out. I've helped many investors, active or passive, with that process, and always happy to take a look. And remember, I would always rather pass on a deal in 5 minutes than try to fix it in 5 months. So I do these pop-up lives weekly, usually Thursday or Friday afternoon. So if you'd like to be notified of future ones and not miss out on them, I encourage you to subscribe to either LinkedIn if you happen to be watching on LinkedIn, or YouTube if you happen to be watching on YouTube. I pop up for a few minutes every week to discuss relevant topics or frequently asked questions that I receive from passive and active investors, or share my thoughts on market topics that are relevant and popular. And Yeah, if you'd like a second set of eyes on a deal, feel free to connect with me one on one. I wish you a beautiful rest of the day, a great weekend, and I'll see you next week.